What's up, everybody? What's up? Just got this candle. Smells like I was right about Bitcoin. I saw this on Twitter. I got it on Etsy by 21M Clothing. So if anybody gets the reference, comment below. Let's see. All right. So shout out to them. Made a really cool candle. I wanted to get it for Thanksgiving to have it on the table, but it didn't come in time. But that's all right. But hey, so I wanted to commemorate this day of $100,000 Bitcoin. What a journey. What a journey. I'll tell you, man, what an exciting time to be alive. So this right here is Bitcoin this year. Like, what an amazing year. Each one of these little red and green lines is one day. And if you look at today, I mean, look at that. That's crazy, right? So what makes me kind of excited is I have a lot of friends and family, that are reaching out to me, right? And they're like, Dave, am I too late? Am I too late? I bought a little bit. I'm kind of mad. I don't want to get in now. I'm too late. FOMO is kicking in. I don't know. So, I don't like to tell people what to invest in. I don't give investment advice unless it's real estate and you hire me and you're my client, but when it comes to these things, I thought I would just share my story and tell you, and I say a lot of things in these videos all the time, but this is why I don't think it's too late for Bitcoin, right? And I'm going to break it down for you, okay? So kind of what was eye-opening for me, right, is during C19, okay? So let's look. The whole world was shut down, and the stock market just kept setting record highs. It was blowing my mind. I didn't understand why this was happening. So this is March of 2020 to January of 22, right? So that whole year that everything was shut down, the market just ran and ran and ran. And I didn't know really how to invest then, right? And I'm going to explain to you all the lessons I learned and where my mentality is now and why I make these videos. I don't make videos to tell you what to invest in. I make videos to lay out my thesis, and kind of why and what I'm seeing and what I'm learning. And as a byproduct of that, I create some habits to avoid being poor. So I looked at this. I remember living through this, and I could not understand for the life of me, why does the stock market keep going up? I'm trying to bet against it because I'm convinced it has to crash because the world is shut down. But learned some valuable lessons that year. All right. And by learning that and opening my eyes and kind of going down the journey that I've been the last 3 or 4 years has got me to where I am today and the mentality that I have. And a lot of things came out of that. Okay. So why did that happen? Okay. And I think it's like 3 things. Okay. Really 4. The 3 add up to the 4th one. So the first thing we learned about, during that time, was debt, right? The government debt just grew out of control, right? Here's the debt. In my lifetime, I'm in my mid-40s, I'm Gen X. In my lifetime, the government debt has increased 4,800%, And a lot of that was right here during C19, right? That was the big dramatic part. So if the government is printing money, remember we were getting stimulus checks, right? Everybody was getting checks mailed to them. Everybody was collecting unemployment. That was just debt that was created. What happened to that money? A lot of it went into the market, right? So you just pumped and pumped and pumped all this money into the system, right? All this money got pumped into the system, Now the government spends money, right? So that's the second thing I learned. Right? We run these deficits and we spend an incredible amount of money. This year alone, $7 trillion we're going to spend. And here's some examples of this. It's kind of just gut wrenching, right? This was posted today on Twitter, right? 94% of federal employees do not show up in person on a full-time basis. We're paying for this. These are buildings in DC that are virtually empty all year. You know what I mean? It's just, how is this not, this is all in this number right here, this spending and this debt. So kind of, once I realized this, it kind of all comes back to it, right? And it's still happening, right? Just this week, Joe Biden signs a deal to allow these people to continue to work from home, knowing that Doge is coming and they're going to try to, lower government spending. They did it, okay? So government spending contributes to government debt. All right. Another thing that's a ticking time bomb that nobody talks about is the money that we owe in the future. We have $221 trillion of unfunded liabilities. And I say this stuff all the time because these things right here are what contributed to this, right? And then as a byproduct of that, the third thing that I realized all that creates is inflation. So here's cumulative inflation in my lifetime, 350%. So something that cost $100 when I was born is $350 today. I don't have that chart, but the wage chart, I guarantee you, did not go up 350% in my lifetime, right? So it's like a zero, it's a losing game. That's what I learned, right? So I'm looking at this S&P 500, the stock market's going crazy, the whole world's shut down, and I'm like, dude, what the heck is happening? Do you know what I mean? And the conclusion that I came to was very simple, right? Money's not real. It's not real, right? So all these things I learned my entire life that I thought were the rules to make it, it's not real anymore. Do you know what I mean? And when you kind of like learn this stuff and you realize how much has happened in my lifetime, how cumulative this stuff is, 4,800% added to the debt and 350% added to inflation. How are you ever going to make it? And so growing up, the rules that I learned, the values that were instilled in me by my parents and my family, like you work hard, you get a good job, you work hard, you save your money, and you put your money in a bank and you save it, right? And you save and you build for a rainy day and you save for the future, and that's what you do. But when inflation is 348% and the government's printing money to the tune of 4,800% in your lifetime, that money in a bank is just being stolen from you, right? And that's what I learned. So during C19, and all the years before that, I had been investing in 401ks and I tried crypto in 2017. I really didn't get it, but I was like thinking, all right, I'm going to invest so I can get rich. That was my plan, right? That's what everybody does. People look at the Bitcoin chart, they're calling me worried about they're too late because they're scared that if they miss the boat to get rich. That is not why I invest. I create habits to avoid being poor, right? So by coming to this realization, it's a concept. It's called the sunken cost fallacy, right? I don't know if you guys have ever heard of this, but basically what the sunk cost fallacy is, it's a tendency for people to continue something because they've already invested their time, energy, or money, even when abandoning it would be more beneficial, right? I mean, you see it in so many aspects of life, right? We grew up watching Jerry Springer and Maury, right? All those terrible relationships that people stayed in. And we're like, why are they in these relationships? Why are they still with that guy? He beats her up. All these things, sunk cost fallacy, right? You've been with this guy 20 years. You just like, you got too much invested in it, right? The mentality of what I learned about how money works, it's easy to just rely on that because that's the way it's always been. Okay, fine. And that's a thing that I think stops a lot of people because it's the sunk cost fallacy. They don't want to take a minute and say, hey, wait, maybe the rules are changing. Maybe the things I always thought I knew and the rules I was supposed to play by and the things I learned my whole life, maybe they don't apply anymore because there's $36 trillion of debt. 4,800% increase in government debt in my lifetime, 350% increase in it just goes on and on and on, So once I realized that, I was like, all right, what I'm doing is not working. I'm never going to make it. Do you know what I mean? And I'm going to be stuck in this rat race for the rest of my life. I'm never going to catch up, right? I'm always going to be struggling. I don't own my time, right? And time is the most important thing. And we'll get into that in a minute, okay? Because time is finite. So that led me down a path, okay? And around that time, towards the end of 2021, I really started looking at things differently, kind of learning some stuff. I read some books. This is a book I recommend to a lot of people, The Bitcoin Standard. All right. And this book is not go buy Bitcoin. It's the greatest thing in the world. And here's all the reasons why. This book is everything I just talked about broken down. Right. And it's kind of a good starting point. And then you start to open your eyes and you start to learn different things. And you're like, all right, the money that I value, the money that I work so hard for, the money that defines everything I do and I put in the bank through inflation and money printing is just being devalued rapidly. So, I worked 10 years to save this money, and inflation during that time is 40%. You just stole 4 years of my life from me. Like, that's what I started to realize and make that transition in my head. So, like I said, I don't invest to get rich, right? I create habits to avoid being poor. And as a byproduct of that, I may just get rich. I don't know. But I know I don't want to be poor. All right. So one of the things I learned in this book is the concept of time preference. And that was big for me. I never really thought about that, but what's time preference, right? So right here, it's the measurement of the degree to which someone favors their immediate well-being versus their future well-being, right? So if you're like, I need it now, I need to have it right at this moment, you have a high time preference, all right? If you're more inclined to delay gratification, right, to prioritize the future and build something for the future, you have a low time preference. So if you're investing to get rich quick, high time preference, right? You're never going to get ahead. You're always going to be chasing. You're not going to have a good plan. You'll get lucky just enough times to suck you in and keep you in the game, but you're going to lose, right? But if you have a low time preference and you're focused on the future and you understand that the system you grew up in is not working anymore, the rules have changed, everything flipped, right? If you can wrap your head around that and understand that, then it's easy to have a low time preference. Look at the examples here, right? High time preference, credit cards, donuts, a sports car, right? Low time preference, building a family, learning, exercising, growing, right? That's low time preference. And if you have a low time preference, you realize, right, that the money that we work so hard for, it won't stand the test of time. So you have to find something else that will stand the test of time. So the time and the effort and the energy that you expend to save for your future won't be stolen from you through inflation and bad government policy and stuff like that. So that's what led me to Bitcoin. And that's why I think that Bitcoin, okay, is not too late. I don't think. Again, not financial advice. This is the journey that I took and the lessons that I learned. And this is why I am where I am as far as with Bitcoin, right? So any of my friends that call me, my family, hey, should I do it? I always tell people this: buy a nominal amount, $100. Just buy $100 worth. Now you have some, and it changes the dynamic. But you need to learn about these concepts to be successful. Because if you just buy something because I told you to buy it, it's not going to work. The moment the price drops, because it goes up and down, right? But we're measuring it in something that's evaporating. So this is what I learned why Bitcoin, as far as a savings avenue, a store of value, is so much better than the money that I've been chasing my entire life and the lessons that I learned. Okay. So again, this is like all stuff from this book, kind of opened my eyes to that. I want to share that with you. Maybe I'll plant some seeds and get people thinking, right? So if you notice, okay, there's some things, right? So gold was always kind of that thing, but gold has some weaknesses as well. Gold's not portable, right? It's difficult, so verifiable, right? What does that mean? That means that you can tell if it's real or not, right? So Bitcoin is very easy to tell if it's real or not. It's on the Bitcoin blockchain. That's it. It's undeniable, right? Gold is a little bit difficult to tell if it's real or not, right? If you know what you're doing and you have the right equipment, you can test it, but it's not, I wouldn't be able to tell. All right. And then money, again, there's counterfeit $100 bills all over the place. Who knows how many times you've had counterfeit money in your life and didn't even know it. All right. So it's easily, it's that. All right. So fungible, again, they're all the same, right? I think fungible is like, probably should have looked that word up, right? I think it's something you can hold. It's real, right? But it's there. So they all kind of share that. Portable, that's a big one, right? Moving it around, right? Bitcoin is very easy to move. It's digital, right? Gold's very difficult to move. All right, take $1 million of gold from New York to Tokyo. That's going to be a very difficult proposition. $1 million of Bitcoin from New York to Tokyo, you click a button, it's there in 10 minutes in their wallet. Money, same idea. You could wire it. It's a little more challenging, but it's, a day. All right. Durable. Gold is very durable, right? Whereas, money is not, right? Divisible. So how do you spend money, right? So a dollar is divisible by 100, right? 100 pennies go into a dollar, right? Gold, how do you divide gold to spend it? It's very hard. Again, you need to measure it out. There's a process. Bitcoin is divisible by 100 million. So you don't have to buy one Bitcoin. You can buy 1/100 millionth of a Bitcoin. 1,000 100 millionths of a Bitcoin is a dollar. All right. Scarcity, that's the one that's key right here. This to me is the most important one. Scarcity. Okay. And what scarcity means is how easy is it to create more, right? So money, dollars, euros, British pounds, it's the whims of the government. They just print it. We showed you that, right? Like they just print money at will. All right. Gold, nobody knows how much gold there is, right? If gold's expensive enough and worth enough, someone will go get an asteroid and bring $1 quadrillion worth of gold to the world and destroy the market. Bitcoin, fixed schedule, 21 million. All right. Established history. Gold's been around thousands and thousands of years. American dollars have been around 200 years, 250 years, whatever. Bitcoin, 15 years. Censorship resistance, these are the other things about it. Decentralization. So, long story short, guys, I don't think it's too late. But I think if you're looking at Bitcoin as something to get rich quick and throw money into, and you feel like you missed out, I can't. That's just not how I roll. I don't invest that way in anything, right? When I invest in Tesla, MicroStrategy, Solana, all these different things that I invest in, even real estate, I don't look at it as get rich quick. I look at it from this perspective of a low time preference and taking some time. All right. So, that's the journey I took. That's what got me here. So if you're thinking like, oh man, did I miss the boat? You didn't. But you have to adjust your perspective on why you're looking at it. And if it's to get rich quick, I'm not the guy to talk to. But if you're trying to create habits to avoid being poor, I'm the guy to talk to. All right. And that's why I do what I do, guys. All right. So, hey, exciting day. We made it to 100K. What a milestone. What a journey. And just keep it moving, man. Life is good. No complaints, guys. All right. Take care.